Hello, everyone, and welcome back to a student's intro to alternative investments. I am Elias Carson, a master's student in business analytics at Georgetown University, and today I'll be your host. I am joined by Dr. Sylvia Kwan, and we will be discussing modeling alternatives. Dr. Kwan is Chief Investment Officer and CEO at Ellevest. She also has over 30 years of experience in the finance industry, and she also sits on the board of 3 different companies, including ADISA. Welcome.
Thank you, Elias. It's great to be here.
It's great to have you. Before we jump into modeling alternatives, could you share a bit about your background in terms of your upbringing, maybe what specifically may have encouraged you to take the professional direction that you've taken?
I actually had no intention of being in the finance industry, even though I would say it's really in my DNA. My father was trained as a mechanical engineer, but he got really bored with his job. So in the evenings, he would, at that time, this was many, many years ago, he would trade stocks. And so eventually he switched careers and became a stockbroker, much to the dismay of my mother. And so when my brother and I were growing up, my mom said, you can choose any career you want, but don't follow in your dad's footsteps. And so it was never very high on the list. I didn't know what financial services much was, but eventually I found my way into financial services and have never looked back.
All right. Well, I'm glad you made the choice to join us.
Me too.
Knowing that your father was an engineer and you majored in engineering economics, could we speak a bit of what may have inspired your academic pursuits?
Yes. My undergraduate degree is actually in computer science applied math, and I had every intention of becoming a software engineer.
Okay.
When it came time to find a job in my senior year, I started interviewing at a lot of these large firms, large technology firms, and realized that I didn't think I was going to be very happy there. And when you're a senior and you don't have a job, you start interviewing with anybody who will give you an interview. And one of those happened to be at a large investment bank in Boston. And they had a program where you could spend 3 months in different areas of the bank. And so that was perfect for me. It allowed me a little bit more time to figure out what I wanted to do. And the last rotation that I had was in a quantitative portfolio management group. Okay. And that's really where I found my home.
Okay, so it's all coming together. And that also makes me wonder, since I'm pretty sure most of our audience are college students who may someday have the opportunity to pursue a PhD in their career, can we speak a bit about what encouraged you to make that decision and choose engineering economics?
Yes. So since I had a background in computer science and I decided financial services was the place that I wanted to be, I felt as though I didn't have a really good formal education in finance. And so that was the reason I decided to go back to graduate school. Now, this field, engineering economic systems, is actually a multidisciplinary field where students are given a toolbox of tools with the intent of solving complex problems with a lot of uncertainty, which I believe very well describes financial markets. And so it's a different approach. Obviously, we took economics and things like that, but the idea was really arming students with different tools like optimization systems and things like that, macroeconomics, to really try and solve problems. And so that's what drove me to pursue this in a slightly different direction than is typical.
When you said you lacked the formal training, I feel like that may be something some students may feel when they enter into professional fields. What was it that told you that pursuing a full academic degree was the best route to achieve it, as opposed to brushing it off as imposter syndrome?
I love this question that you asked. And I think looking back, at the time that I decided to pursue a graduate degree, I had already worked for 4 years as a portfolio manager, and so I had very practical experience. And you're right, I kind of hadn't really thought about it as imposter syndrome, but one of the things that drove me into this particular discipline was in the practice of portfolio management. At the time, I was a fixed income portfolio manager for pension funds. We had some really, really interesting problems that institutional clients had. And the solutions that we gave I thought were pretty good, but I felt like there was more. And I felt like I didn't have the skill set to create those solutions that I thought would be better for our clients. And that is really what drove me. And my plan was to actually do my dissertation in this particular area to try to solve this problem. But of course, once you're kind of in a learning environment, there's so many other interesting problems. And so there was a pivot there. But that's what originally drove me to this graduate program.
All right. Thank you for answering that. I'm going to jump straight into a bit of modeling alternatives. As a business analytics student, when I first heard the term, I felt modeling and analytics would come at a contradiction, seeing that analytics requires a lot of data and modeling requires a fair amount of data, as opposed to alternatives, which industry kind of thrives on the lack of data, so to speak, or the opaqueness in data. So can you explain a bit what exactly modeling alternatives looks like and how it may differ from stocks and bonds and other public market assets?
Yeah, you hit the nail on the head. I think modeling alternatives is very different, obviously, as you pointed out, for many of the reasons. With stocks and bonds, you have immediate price movement. It's very liquid. Everyone votes with their dollars. You see the results. You have a long history. With alternatives, of course, it's very different. Alternatives are not priced on a daily manner. They're illiquid. They have different horizons. And then alternatives in general, there's so many different flavors, right? And so I think about alternatives as having so many different dimensions relative to stocks and bonds. So when modeling alternatives, I really think about things like risk management. And so it's really more of very much a qualitative type of modeling as opposed to a quantitative, because as you pointed out, there is a lack of data here. So really, that's really where I think a lot of the due diligence and the conversations that you have with fund managers to understand their investment process, to understand how do they handle and mitigate risk, what happens when something goes wrong. Are they roll up your sleeve types of managers, or do they just we had a bit of bad luck, that's the way it is. And so it's those kinds of things that I think are most important when trying to model alternatives. And of course, together with, when do you expect distributions, when do you expect capital calls, all of those kinds of things from a client perspective are very important as well. But you're right, it's a bit of apples and oranges, and so it's very difficult I know a lot of people try to kind of, use the modeling techniques in bonds and stocks and apply them to alternatives, but I think that's a risky proposition.
I know you've already mentioned some of the qualitative variables that you may use to assess, to build out the models that you use for alternatives. Can we speak to those variables a bit more, and what do you feel would be the most important ones?
I think risk management, and really, because you kind of can't see or predict a market price or a valuation for alternatives in many cases. In some cases, there are some. It's really about understanding the different levers that managers have. And so in our experience, what has been more important than even quantitative track record is looking at how when managers, when their companies or their loans or whatever it is have run into trouble, what do they do? And that actually has been really fascinating, I would say, over the years, especially, for example, during the pandemic. What did managers actually do? And there's a huge difference between managers who really roll up their sleeves and actually work with every single portfolio company to figure out, how do we move forward? How do we mitigate the risk? How do we help them, versus managers who don't? So, I think when it comes to alternatives, I'm very, very focused on risk management and how managers really deal with things that don't go as expected.
Oh, that's a really good point. And it makes me definitely reconsider how important risk management is in the perspective that you mentioned of how people respond to what we would see as a crisis, I guess, or things that fall outside of the normal days of business. And it makes me think in crisis times you have some managers who quote unquote, stick their heads in the sand. And then you have others who, like you said, roll up your sleeves and get the job done. So
Exactly.
A great point. Let's move on now to the Ellevest algorithm that you have developed. I've been kind of very excited to hear more about it. This is a gender-aware algorithm at Ellevest. Can you tell us a little bit more about it?
Sure. So we developed a gender-aware algorithm at Ellevest that really applied in many ways to our digital portfolio offering, which earlier this year we actually sold that piece, but I'm happy to still talk about it. What we wanted to do was create an algorithm that really reflected what we believe are kind of real life realities that women have. So one easy one is, women in general live longer than men. So really modeling out in terms of the simulations, modeling out a longer time in retirement, a longer lifespan. Other things that are specific to women are, unfortunately, there's still a gender pay gap, and women's salaries peak a whole 15 years earlier than men. And so when you have a model, for example, that models salaries, say going up with the rate of inflation, linearly, every year, that doesn't apply so much to women. Women also take some career breaks to raise families, and often they come back to salaries that were lower than when they started. And so taking all of that data and building that into the algorithm, we felt was important. It's not a very rosy picture, but it's one that is more reflective of what women face over a career.
I would like to know your opinion on how impactful taking in those considerations are in terms of achieving the returns that you're aiming for, and then also, the endpoint go together, which is achieving the goals that your client has set out or asked of you. And how big of a differentiator is it from the typical modeling techniques that a firm would apply in this situation?
I would say that if I go straight to the bottom line on what does this algorithm show women, is women have to save more. If they're taking career breaks, if they have, a gender pay gap, if they have to live longer, obviously there's a lot of things in play here. And so what our algorithm would output with respect to a financial plan really means that women need to save more. It's not that women need, different investment products and things like that, but they do need to save more. I would say the other thing that we have learned, that women have, in many ways, a different approach to investing. And so instead of thinking about investing as, I've got to beat the S&P 500, I want to chase alpha, et cetera, it's really more about a means to achieve a financial goal. And so women are more excited about investing if they're like, I'm investing to achieve a comfortable retirement, or I'm investing to ensure that my kids go to the colleges of their choice. I'm investing to buy a home. And it's really having that frame and having those goals and investing towards those goals. That has been one, I would say, big difference between the approach that generally, I'm obviously speaking generally, that women have versus men.
Just to summarize that, for, I guess, the more retail-oriented individuals who may be listening to the podcast, would that be a fair conclusion for a woman to take home, say, working a regular 9-to-5, should I simply save more, and to better anticipate for the life events that most people don't take into consideration?
I always encourage everyone to save as much as they can, men or women, for sure. But I do think for women, it's even more important. I think it's not the only thing. And so at Ellevest, some of the things that we have done in the past is offer, career coaching to help women kind of close that, gender pay gap, for example. And so there's a lot of different ways to try and close those gaps. The investing gap is just one of them. But yes, I would always encourage women to save more and invest. Save and invest.
Got it. I'll be sure to tell my mom. Now that we mentioned career coaching offered back, I think it'll be a good time to switch to some of the career questions that I'm pretty sure some of our graduate listeners would be happy to hear. Let's start with college students, juniors and seniors preparing to come out of a college. From your very broad background, both professionally and economically, what skills do you think would help a student stand out most let's put one technical and then also one soft skill that you think is overlooked when coming out of college and applying for positions in alternative investment?
I think having a comfort with numbers is very, very important. You don't have to be an Excel wizard or things like that, but being very comfortable with numbers and understanding them, I think, is very important. I would say more important in many ways is actually the soft skills. And so I encourage, students to hone their communication skills at every single opportunity. I feel kind of in this world with advancing technology, and we've got, obviously AI is here. Yes. There's so much that AI can do to help, but it can't read people's faces. It can't put a client at ease, for example. And I think those, being able to still communicate complex situations or complex products in a very easy to understandable way, in a very empathic way, is really, really key. And there's a ton of smart people, obviously, in the financial industry, but I think there are very few who are smart and can communicate and write well.
Yeah, right. So numbers in English class, writing classes.
That's right.
Math and English. And then also for individuals like myself who have already started some sort of professional career in finance and would be interested in transitioning over to an area closer to alternative investments, what few roles would you think would be a good target area in terms of where we may best fit or get the best experience at the entry level?
I think there's a lot of possible paths. Certainly being at a firm that embraces alternatives, doesn't have to be the only thing, obviously, that it does, but embracing alternatives, really trying to learn as much as possible. So I think there's a lot of available resources out there, certainly at ADISA, Kaya, which I know you had mentioned before. So learning about it, but also taking advantage of any kinds of podcasts or webinars from alternative sponsors, alternative asset managers, and just really kind of jumping in with both feet and listening, learning, to really familiarize yourself with the language, for example, the breadth of alternatives that are out there. And then from a practical perspective, I can talk a little bit about Ellevest. We have a portfolio team. Obviously, we do stocks and bonds and alternatives. And for a very long time, I was the principal person that was very focused on alternatives. And, we had portfolio managers that were focused on equities, portfolio managers that were focused on fixed income, but everyone's very interested in alternatives. And so where we started was we have a lineup of alternative managers. And so we started having the portfolio managers who were previously, they still are focused on equities and fixed income, attend a lot of the ongoing due diligence update webinars just to get a flavor, and we put them in charge. Like, you are now in charge of ongoing investment due diligence of this, and helping them kind of build those relationships, ask the right questions, and it's a good place kind of to start. Like, I wouldn't throw somebody and say, hey, here's an alternative investment, go do due diligence on it, right? And so that's kind of how we've done a little bit of that at Ellevest. But I think there's a lot of different paths. But I think it is useful to align yourself with a firm who really wants to embrace alternatives, if that's an area that you want to go into. And
you segued me into my next question. During my research, I noticed that you hold both the CFA certification and a Kaya certification. And since I'm a big fan of John Bowman and Kaya, me and all of the HBCU fellows here, I can't miss the chance to ask about how important you view holding those professional certificates can be for you to develop authenticity, I guess, and credibility in the space, as well as education and networking relationships.
I think they're both very important. Are they absolutely necessary for someone to be successful in the space? Of course not. I think, having experience in the space, certainly replaces that. But I think for me, I did have my CFA, and I started really leaning into alternatives at Ellevest, and I felt having the Kaya designation, and it's not just the designation. For me, it's always just about also the education. Right. Like, did a lot in certain asset classes of alternatives, but having a very broad, like, understanding, all the different, not all, but many of the different flavors of private equity, for example, or private credit, and having that broad knowledge as opposed to just the things that I was investing in, I thought was important. So I think having those credentials gives one also confidence kind of to talk about it. So I feel they're a huge value add. They're a must-have to be successful, probably not, but it'll give people a leg up.
It's great to hear. Kai will soon hopefully have me and a few others, 20
Yes.
members. What would be, given the growth in alternatives over the past 10, 20 years, just exploded in terms of its place in the 60-40 traditional portfolio. I feel some areas can be a bit saturated or get a lot of attention.
Right.
So what emerging areas or new parts of alternative investments do you feel a college student coming out of college would be interested in pursuing?
Well, I have my favorite, which I'll talk about, and that is, it's not a specific asset class, but it is in this area of impact. And so alternatives, I believe, are the best asset class to both, generate potential returns and also have a very positive impact. And I feel more and more with your generation, younger generations, what I'm hearing is that, your generation wants to be more intentional with their money, like where they spend it, how they spend it, more emphasis on experiences even. And we're seeing so many of the younger generation really being thoughtful about investing. They don't necessarily just want to buy the S&P 500 index, but they want to understand and align their investments alongside their values. So I think this area of impact alternatives continues to grow, and I think with younger generations entering into the financial industry and also younger clients, I think it's just going to grow even more.
Right. Definitely will put that on my list, things to do, things to pursue. And it's a good area to explore and I think more about it, especially in terms of renewable energies and that growth in alternative space. Good point.
Exactly. I would say, I'll just add to that a little bit. It's related to this, but, venture, I think, is very much, the asset class of innovation, and that is where a lot of some really great entrepreneurs are really developing new technologies, new innovations to really help solve, some of the most pressing social issues that we have. And that, to me, is super exciting to be able to invest in a way that kind of helps some kind of outcome.
Yeah, it's you get best of both worlds. You get to
That's right.
Make money, push innovation, and impact, do good social impact.
Exactly. It's my double rainbow road.
Yes. After all of the things you've done, I have to ask, were there some type of motto or mantra that kept you motivated in terms of the career pivots that you made, or in reassuring yourself that you were the right person for this role, or you were meant to be in this room?
Ooh, that's a tough question. It's a really good question. I'm not sure that I ever 100% feel like, I'm the right person, for this. I would say through all of the twists and turns of my career path, I would say, one of the things that I really try to do is not look back and always look forward. You can lament the situation you're in or feel disappointed, take the time to feel the disappointment, but when you're done, don't look back and always look forward. Try to figure out, is there a small step that you can do? What can you control to move forward? And so that would be my motto.
No, don't look back, keep pushing.
That's right.
And lastly, we've covered a lot about you as a professional. Is there anything that you would like to share with the audience to get to know Dr. Kwan as a person?
Well, I just got back from a cycling vacation in France, so I do love to cycle. I also do enjoy triathlons. I would call myself an enthusiastic triathlete. And the other thing is I am addicted to the game Words with Friends, which is kind of that online Scrabble game. It's something that I do to relax, believe it or not.
No, I do believe it. I can't even count how many times I've come to see what my mother's doing on her tablet at 12 in the morning. I have to give you a huge thank you for giving me the time to interview you and learned so much today about modeling alternatives.
Well, thank you so much, Elias, for having me on the podcast. It's been a lot of fun.
It's my pleasure, and I hope they give us the chance to do it again. And,
absolutely.
If you liked this episode, don't forget to subscribe so you'll be back with us for some more student-to-expert conversations in alternative investments. Until next time, and thank you for tuning in to A Student's Intro to Alternative Investments.